Welcome to Sathish Speaks channel. Last 18 months, we have witnessed a phenomenal rally in equity market. Despite there was a pandemic, that pandemic has brought on so much of economic activity and most of the fundamentals were down. And despite that, even the market has witnessed a phenomenal rally in the last 18 months. April 2020 to till date, market has touched many new heights. And after touching these heights, yesterday the market has been corrected by 2% and today it has been corrected by 1%. And many investors are asking me, messaging me that is that the market been overvalued now? And is there any bubble is the currently in the market? So for them, I have two approaches, two views. One is the macro fundamental view, other one is the valuation view. Once you understand these two approaches, you will understand where the market stands currently. So I'm Sathish, financial consultant and author of this book called Untold Wealth Secrets. If you need any advisory recommendation on equity, mutual fund or portfolio construction, my WhatsApp number is there. Please do connect with me. And if you are watching this video, please click the like button now because the chances of it reaching the many people is high if you click the like button. So please hit the like button now. First, the macro fundamentals. There are ace investors in India like Mr. Rakesh Jhunjhunwala, Mr. Ramdev Agarwal. They are having a view that Mr. Rakesh Jhunjhunwala's view is that the Nifty itself will touch 1 lakh by 2030. And Mr. Ramdev Agarwal, he advocates that Sensex will cross 2 lakh by 2030. Structurally, it is true. We are in a very sweet spot. India is in a very sweet spot. Structurally, fundamentally, we are very firm. And India is a 3.2 trillion economy, and the journey is going to be a 5 or 6 trillion economy very soon, 2027, 2028, like that. And we are witnessing that the GDP transformation are happening. And once the GDP grows, definitely it will have a positive impact in the market as well. So structurally, we are very strong. But let's look at the valuation aspects. Before we look at the valuation, let's understand why this rally is happening for the last 18 months continuously. Number one, so what is the alternative available for any common investor if he skips equity as an asset allocation? Number one, he can invest in FD. Number two, gold. Number three, real estate. Number four, bonds. But there is no best alternative available for equity. So that is the phenomenal reason that the market has been rallying. For example, FD, you are seeing that the FD rates were 14% in 1990s, and then it has dropped to 8%, and now today we are at the current going FD rate, it's around 4.5 to 5%. So FD is not an alternative. Gold is not an alternative. Gold historically delivers only 8% of returns, and gold is not an alternative for equity. And of course, real estate market. Anybody who was invested in real estate from 2008 to till date, they are not actually seeing the same return of what is equity is delivering. And there is a huge liquidity problem when it comes to real estate as well. So there are no alternative available, and all the money, whatever the money, the investable surplus is coming to equity market, and that is how the 10,000 crore is the SIP book has been built in Indian retail market. Last year it was 6,000 crore, and today it is a 10,000 crore SIP book. Number one. Number two, strong liquidity. There are so much of adequacy in the money, and all the money has been flushed to the equity market. And number three, the government reforms. Government is giving a lot of incentivization for corporates, and they are spending a lot of money into infrastructure. The government spending is high, and the incentivization for the industry and corporates is also high. That is propelling the market. And from eternal optimism there is in the market. Because of the view from ace investors, the fundamentals, the macro fundamentals, next 5 to 7 years, there is a very optimistic view. These are the reason that the market is actually rallying. And if you wanted to gauge the market, there are the two indicators are there. Number one is that the price earning ratio. So the current PE, the Nifty 50 trailing 12 months PE is around 28 times today. Historically, the long-term average is around 17 times, and today it is at 28 times. So we are currently at 52% at a premium than the long-term average. So is this a way to analyze whether the market is overvalued or not? This is just a factor, just an indicator. It can't say completely that the market is being overvalued and there is a bubble. No, you cannot come to a conclusion like this with one parameter as such. But Historically, it is high and markets are not at the very cheap levels, definitely not at the cheap levels. That is the message we can take it from PE as an indicator. And next, market cap to GDP. This is the one of the most favorite indicator for Mr. Warren Buffett. Historically, Indian average has been 75%, but today we are at 105%. And again, we have crossed only once in the last 41 years. Sensex historical average is available from 1979 to till date in the entire 41 span of time. By 2008, we have crossed beyond 100, and again today we are at 105%. But these are just an indicators, and with these two indicators, we can't say that the market has been overvalued or not. But these two indicators for sure telling us that the market are not at very cheap levels. We are structurally, firmly fundamental countries, in a very sweet spot. But the growth, the rally will never happen like the way it has happened in the last 18 months. There can be a little fall, there can be a little correction, and the rally can continue from 2021 to 2025 or 2027. There cannot be a straight line. So whenever there is a small fall or small correction, so what an investor can do at this point in time is, number one, don't get panic. Don't vacate this space, because a lot of investors are messaging me that there is a bubble or is the market is overvalued. Should I sell my stock? Please don't get panicked, because we are in a very sweet spot to mark. The equity is the best asset class for next 5 to 7 years. Never ever vacate this space. If you vacate this place, you will repent a lot. So don't get panicked. Number one, whatever the fall is happening, the 3%, it is just an adjustment. It is not even a correction. It's a very perfectly normal. Number two, never take any leverage position. Many investors are very greedy investors. They actually play with futures and options. Please do not put your money into futures and options when the volatility index is high. Today, the volatility index is very high. So don't put your money into high risk positions. Number three, please make a diversified portfolio for yourself. Diversification is the foundation of wealth creation. Number four, rebalance your asset allocation, because you will be having a percentage, 40% debt, 60% equity, 20% debt, 80% equity, like that. So whatever the percentage you have set for yourself, the equity percentage would have definitely gone high. So bring it back. Book some profit, put it back into fixed income products. So rebalance your portfolios. And most importantly, do profit booking. Realization of the money is also important at times. For example, you might be having some kind of an aggressive portfolio or schemes or funds or stock in your portfolio, like mid and small caps. What you can do is you can share off some profits and bring it back to the fixed income and then put it back to the market if there is any fall, or systematically put the money into the market. Like that, suppose if you would have invested 10 lakhs into a very high risk scheme, and the 10 lakhs would have grown to 20 lakhs by this time, withdraw the 20 lakhs, put it back into balance advantage fund or equity savings fund. In equity savings fund, the equity participation is only 15%. Rest 85% is the fixed income. From that particular scheme, you can systematically transfer that money from equity savings scheme to the same mid or small cap scheme, so that you can actually de-risk the near-term volatility. So this can be a good strategy. So like this, that there are many strategies which are available to check that your portfolio intact, even if there is any short-term fall or correction in the market. So I'm Satish, author of this book called Untold Wealth Secret. If you need any help, assistance, recommendation on mutual fund, equity, or portfolio construction, my WhatsApp number is here. Connect with me. And if you like this content, please click the like button now, because the chances of this content reaching the other participants, viewers, are very high. Once you click the like button, please click the like button. And if you want to join my free WhatsApp group, the link is there. Join me. I am sharing many personal finance insights and investment strategies in my WhatsApp group. Most importantly, stay tuned, because I will be giving lot of informative videos in future as well. So stay tuned. I will see you with another interesting video. See you. Bye bye.